Welcome back to Finance Homefront. Thanks for tuning in. Today we're diving into how you can start building a strong cryptocurrency trading account even with a small initial investment. As always, I want to remind you that this content is for educational and informational purposes only. I'm not offering financial advice. If you enjoy the insights and want to stay updated with more strategies and market analysis, please be sure to like this video, subscribe to the channel, and turn on notifications so you don't miss out. Now, let's get started. We've all come across the familiar saying that it takes money to make money, right? However, one of the incredible aspects of trading in the world of cryptocurrency is that surprisingly, you don't need an extensive amount of starting capital to build a profitable trading account. With a bit of know-how and the right approach, it's quite feasible to turn a small amount of money into a growing income source. Today, I'm going to draw on my 7 years of experience as a full-time cryptocurrency trader to walk you through precisely how to transform a modest account of $100 into a substantial account valued at $10,000. To help you achieve this, I'll cover a few key areas. First, I'll explain how to gain access to trading capital. Then, I'll dive into the strategy I would use to gradually, but safely, expand a trading account. I'll introduce you to a system that you can start implementing right away to begin making trades. Lastly, I'll showcase some case studies, giving you a close look at trades I've conducted alongside my core team of traders, which consistently generates between $3,000 and $5,000 per week from cryptocurrency trading. If this sounds like the type of financial progress you're interested in, please be sure to like this video, subscribe to the channel, and if you're passionate about trading and investing, check us out on Discord and Instagram. Leverage, a key to growing your account. One of the most significant barriers people face when starting their trading journey is the amount of money available in their trading account. That's why I want to explain how you can begin with as little as $100 and effectively access up to $10,000 in capital to make informed trades. I'm excited to be partnered with Bybit, a leading platform in the cryptocurrency trading world. One of the reasons I chose Bybit is that it offers leverage options that can go up to 125 times on certain pairs, though we typically use 50 times leverage for added caution. Understanding leverage is crucial. Without it, a new trader is almost guaranteed to lose money. Here's how this works. With my trades, I generally risk about $500 on each trade, targeting returns of approximately $1,500 to $2,000. But let's scale that down for a smaller account. If we're starting with an account balance of $100, this means setting aside 10% of that balance, or $10, to risk per trade. The next step involves figuring out how many coins to buy to ensure we're risking only that $10. For example, if we decide to buy ApeCoin at a certain price level, we would also set a stop loss point at a lower level. If the coin's price drops to this stop loss point, we exit the trade, thereby minimizing our losses. To determine how much we need to invest in each trade, we first calculate the difference between the entry price and the stop loss price. Let's call this difference 0.57. Next, we take our desired risk amount, in this case $10, and divide it by that difference, which gives us the number of coins we should purchase to limit our risk to $10. This precision is essential. Simply buying a random number of coins, like 250 or 1,000, would throw off the entire risk to reward balance and could quickly lead to account depletion. Now, to understand the capital requirements for a trade, we multiply the number of coins by the entry price. Let's assume we need to buy 175 ApeCoins at an entry price of $3.35 per coin. That's a total of $587 needed to secure this position. Clearly, with only $100 in our account, this would be impossible without leverage. However, Bybit allows us to use leverage to amplify our purchasing power. If we use 100 times leverage, our $100 effectively gives us access to $10,000. This leverage does not alter the risk per trade, which remains at $10, but it increases our ability to enter positions that would otherwise be beyond our budget. For instance, By adjusting the leverage on Bybit, the amount we need to invest for a position requiring $587 can be reduced to $12, or 12% of our account. The leverage changes only the initial capital needed from our account, not the risk profile of the trade itself. Before diving into the specific trading strategy, let's go over some rules that I recommend for anyone looking to grow a small account. These principles will help you make steady progress while managing your risk effectively. First, begin with a defined dollar amount you're willing to risk on each trade. With a $100 account, aim for a risk of 10% per trade, so $10. Each time your account doubles, say from $100 to $200, adjust your risk to match 10% of the new balance, or $20 per trade. Stick with this until your account reaches a higher threshold where you're more comfortable increasing your risk per trade. Everyone has a psychological limit on how much they feel comfortable risking on a single trade. This is important to recognize. Even for experienced traders, a series of 3 losses at $500 each can stir emotions regardless of what the math or strategy says. Knowing your emotional limits helps you avoid poor decisions driven by stress. If you reach the stage where your account grows to say $1,000 and the standard risk of 10% or $100 per trade feels too high, consider stepping it down to $50 per trade. The goal is to stay within your comfort zone and to aim for consistent daily gains. I personally target earnings between $3,000 and $5,000 per week. To achieve this, I typically risk around 2.5% of my account balance per trade. This amount, in my case, is generally about $20,000. Over time, as my account balance grows, I adjust this figure to match my evolving income goals with the intention of increasing my profits. Now, let's dive into the actual trading strategy, a system I've fine-tuned over the past several months with great success. This method involves recognizing a newly established uptrend and mapping out the price movements, which we call waves. In trading, we often analyze the price in a series of 5 waves. First, I identify the beginning of the trend, or wave 1. The pullback following this is wave 2. The strongest upward movement then forms wave 3, followed by a 4th pullback. And finally, the highest point represents wave 5. To estimate the top of wave 5, I use a Fibonacci projection based on wave 1. By marking key levels, such as the 1-point factor, I can better anticipate price movements. Once I confirm wave 5 and observe a pullback, I draw a trend line from the high of wave 3 to the low of the pullback. This creates a price channel to follow. I duplicate this line to set a resistance level at the high of wave 5. If the price aligns with this resistance, it signals an opportunity for a short position where I expect the price to decline. Shorting a trade allows me to profit from a downtrend, which many traders overlook. For example, if the Fibonacci projection aligns with a key resistance point, I set my short entry near that level. If I want to risk $10, I calculate the number of XRP coins to buy by dividing my risk by the difference between my entry and stop loss values. Let's say we need 1,000 coins. With 10 times leverage, this trade requires an initial capital of $37. Raising leverage to 50 reduces this amount to $8, allowing us to open a short position while managing our risk. If the price hits our entry level, we're in the trade. As the price trends down, I monitor for signs of reversal. When the price reaches a lower trend level, it's time to set a profit target using the Fibonacci extension tool. Let's say our profit target is the 2.618 level on the Fibonacci scale. Once this level is reached, the trade closes, yielding a profit. In this setup, if the price drops to our target, we might make around $41. Even if you only win 20% of the time, a 1-to-4 risk to reward ratio allows you to break even. At 30% accuracy, you're already profitable, with even more upside at higher win rates. By maintaining proper risk management and sticking to the guidelines outlined here, it's entirely achievable to scale a $100 account up to $1,000, $5,000, $10,000, or beyond. One of the most rewarding aspects of running this community is seeing the success of our members. For example, a recent student who joined our training program applied the strategies discussed here and on his first trade made a substantial profit of $2,600. Afterward, he continued to make impressive gains, and we couldn't be more thrilled to see his progress. Stories like his reinforce the power of a solid strategy paired with discipline and risk management. This brings us to the close of our guide to cryptocurrency trading and account growth. If you've stayed with me throughout, thank you. Don't forget to give this video a thumbs up, subscribe to the channel for more insights, and join our trading community on Discord for updates, tips, and discussions with fellow traders. I look forward to seeing you in the next video as we continue this journey to financial empowerment through smart trading. As we wrap up, I want to thank you for sticking around to the end of this guide on leveraging a small account to potentially achieve major gains in cryptocurrency trading. Hopefully you've gained a clear understanding of how strategic risk management, along with the right approach to leveraging capital, can create meaningful growth, even if you're starting with just a small initial balance. Remember, it's about consistency, patience, and following a solid plan. If you found this content helpful, don't forget to hit the like button to let me know. And if you want to see more insights, strategies, and live trade examples, make sure you subscribe and tap that notification bell so you never miss an update. Also, I'd love to hear from you. Drop a comment below with any thoughts, questions, or topics you'd like me to cover in future videos. Your feedback and engagement help me keep bringing you the best content possible. So be sure to stay connected and join us on this exciting journey toward financial empowerment. Thanks for watching, and I'll see you in the next video.